Hello, everyone, and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. Global financial markets advanced in the week and month, driven by strong earnings and steady U.S. economic growth and inflation. Wall Street rally extended to the third consecutive week after the Federal Reserve held rates steady and leading tech companies reported strong earnings. World markets extended gains after rate decisions from the U.S. Federal Reserve and the European Central Bank, and investors reacted to a slew of earnings. The S&P 500 index and the Nasdaq Composite rebounded from sharp losses on Monday after a Chinese startup won praise from leading tech companies in the U.S. The emergence of cheaper and more cost-competitive artificial models by China's upstart DeepSeek raised doubts about the need to purchase expensive servers using the latest advanced chips for building large language models using artificial intelligence. Financial markets in China are scheduled to resume trading after the Lunar New Year holidays on Wednesday, and investors are hoping that policymakers will shed more light on the previously announced stimulus measures. The Federal Reserve paused rate-cutting cycle after trimming rates in 3 previous meetings in a row, and the Fed funds rate range was left unrevised between 4.25% and 4.5% at the end of a 2-day meeting today, or rather this week. The Fed also pushed back on the prospect of additional rate cuts in the imminent future, citing elevated inflationary pressures. While the Fed's tough talk on inflation garners headlines, interest rates have been far from restrictive for more than 3 years, and inflation in the service sector and the core inflation have been significantly higher than the target rate of 2% and are showing no signs of easing for more than 9 months. Market sentiment wavered after the GDP growth in the fourth quarter slowed to an annual pace of 2.3%. The U.S. economy expanded at the slowest pace in 3 quarters and slowed from 3.1% growth in the third quarter. The Personal Consumption Expenditure Price Index in December accelerated to an annual rate of 2.6% from 2.4% in November, the U.S. Bureau of Economic Analysis reported Friday. Core PCE Price Index held steady at 2% and matched the rate in the previous month. The alternative measure of inflation understates inflation felt by most families because it includes lower-priced products preferred by consumers to stretch monthly budget in response to higher prices. The European Central Bank lowered its deposit rate to 2.75%, its main refinancing rate to 2.9%, and its marginal lending rate to 3.15%, effective February 5th. The central bank said inflationary pressures are still elevated, largely because of the delayed wage increase and price adjustments. But wage growth is moderating, and corporations are absorbing some of the higher cost of operations. Central banks signaled that additional rate cuts are likely if inflation continues to fall as estimated by policymakers. Sweden's central bank lowered its policy rate for the 5th time in a row at the end of its policy meeting, reflecting the weakening inflationary forces. The Riksbank trimmed its benchmark rate by 25 basis points to 2.25%, citing inflation decreasing to 2% and ongoing economic weakness. The central bank lowered its rates for the 6th time since May, totaling 175 basis points, and the policy committee signaled one more possible rate cut in the first half. In other economic news, China's official survey showed shrinking manufacturing activities in December. Germany's jobless rate advanced and France's inflation accelerated. Japan's retail sales, industrial production, jobless rate, and Tokyo area inflation rate confirmed positive economic backdrop, supporting the case for central bank to continue raise rates. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury eased nearly 4.5% after the key measure of inflation met expectations, and investors doubled down on possibility of multiple rate cuts this year. Texas crude oil prices edged lower by 2% to $73 a barrel, and investors dialed down on demand growth expectations in key markets in the U.S., China, and India. Natural gas prices in Europe advanced 6% to 53 euros per megawatt hour as a cold wave boosted demand and a production outage in Norway limited supply. The euro eased to $1.04 after the European Central Bank lowered its policy rate by 25 basis points, as widely anticipated amid weak economic growth and slowing inflation. The yen strengthened to 154 against the dollar and advanced for the week and the month amid rising expectations that the Bank of Japan will continue to raise rates in 2025. We now shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite extended the rally to the third week in choppy trading amid strong earnings from Microsoft, Apple, Meta Platforms, General Motors, and ExxonMobil. European markets extended weekly gains to the fourth week in a row, and benchmark indices in Germany and the UK traded at new highs after the European Central Bank signaled additional rate cuts in the coming months. The Nikkei 225 stock average extended weekly gains following a three-day rally to Friday after retail sales, jobless rate, and industrial production data confirmed a strong economic backdrop. Hong Kong and China indices advanced in the holiday-shortened week as the top financial regulators announced additional measures ahead of the start of the new lunar year. Indian market indices halted a three-week slide after domestic investors continued to pour money ahead of the union budget this Saturday. As you can see on the screen, world markets have been advancing since November following sharp declines in October. Let us shift our attention to merger deals, market movers, and earnings update from leading companies last week. Microsoft reported a surge in second quarter revenue and earnings, helped by a 21% increase in cloud service sales, and signaled strong demands for its artificial intelligence products. Meta, the parent of WhatsApp and Instagram and Facebook, said fourth quarter revenue jumped 21%, net income surged 49%, and earnings per diluted share rose to $8.02 from $5.33 a year ago. Tesla posted mixed earnings in the fourth quarter as revenue decreased 8% and net income slumped 71%. Model Y became the best-selling electric vehicle in China, despite its high prices. IBM surpassed market expectations in the fourth quarter, and the company's generative artificial intelligence business order book increased by $2 billion to $5 billion. Boeing reported sharply lower revenue and a higher than expected loss in the fourth quarter as the aviation company made fewer additions to property, plant, and equipment, and the company struggled after a long strike at several plants last year. Starbucks said revenue in the December quarter was flat and net income declined as the newly appointed chief executive touts a turnaround. Comparable store sales in China dropped 6%. LVMH announced weaker than expected sales and earnings but proposed to pay a dividend of €7.50 per share on April 28. H&M reported weaker than expected revenue in the fourth quarter, impacted by late occurrence of the Black Friday. Shell, the energy giant, announced strong results for its fourth quarter as the oil and gas company proposed a 4% increase in dividend to 36 cents per share. SAP, a German software company, reported strong quarterly results and expects growth in cloud and software revenue to increase between 11 and 13% in the fiscal year 2025. On Wall Street, investors will remain focused on fresh batch of earnings, including updates from Amazon, Alphabet, Qualcomm, Pfizer, Pepsi, Walt Disney, Uber, and AMD. On the economic front, non-farm payrolls increase in January is expected to slow to 175,000 from a rise of 256,000 in December. Jobless rate is likely to hold steady at 4.1%, and wage gains are expected to remain near an annual rate of 5% increase. The Bank of England is widely anticipated to lower its reference rate by 25 basis points to 4.5%. Across the mainland in Europe, inflation in the Eurozone is expected to advance to 2.5%, and German factory orders are estimated to rebound sharply in December. Investors are also looking forward to the release of trade balance for Germany and France, retail sales in Italy, and industrial production in France. Financial markets in China will reopen on Wednesday following the Lunar New Year holidays, and Kaizen survey of business activities are in focus. Investors are also awaiting the release of official estimates of inflation. The Reserve Bank of India is scheduled to release its monetary decisions, and the central bank may hold rates steady following the release of the annual union budget this weekend. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will